Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Stock Index Futures. I'll start with UK FTSE Futures. Strange piece of action yesterday and indicative of what is going on in this market right now. A high yet bearish harami. That is also an indecisive spinning top. This coming as it did after the previous session's higher bearish black crow that was also a hanging man pattern. Seems there's a lot of contradictory forces at play here, much like last week's outside week. The market was again capped by the upper tine, currently at 70.57 of the December 2020 to late January 2021 bullish shift pitchfork. Meanwhile below, we have as support the top of the old broken rising wedge pattern, currently at 69.46. Now, for the moment, I have also kept the achieved topside targets. Target X in the 70.10 area, the target for the January to March sideways triangle, target X1 in the 70.95 area, the initial target for the late January, early April rising wedge pattern, and target X2 in the 71.15 area, the full target for the rising wedge pattern. The reason why? Well, is that with the market hanging so close to them, I suspect they may become more interesting and possibly give an idea of direction in days to come. Further overhead, we have the high of last week and the first of the lesser projected Fibonacci levels, in this case the 38.2% projected Fibonacci level at 71.42. So far today, another obtuse performance right from the start. A gapping lower open since filled that plunged down through the broken upper wedge trend line, only to halt at the significant January high at 69.10 before pulling back up around the broken wedge trend line. It's all very obtuse. German DAX Futures. Okay, another strange one here as well. A new all-time high yesterday that was also an indecisive spinning top. The second consecutive one as well. That's not all. Yesterday was also day 2 in a 2-day matching low pattern. A pattern that ought not to show up where it did. You see, matching low patterns are traditionally seen as bullish reversal patterns, though the data indicates that more than 60% of the time they are bearish continuation patterns. As you can see, this pattern is in an awkward place for both. This all comes on the back of the last 2 weeks action, where we've seen a fairly rare compound weekly key reversal up. Now, this is a rare pattern, and I think I may have seen only about 20 or so in my lifetime, is when a weekly key reversal up or down, but in this case up, when a weekly key reversal up is outdone by a larger encompassing weekly key reversal up. One would like to look upon this as a superior bullish indication, but this week's action has been limited, if higher. Anyway, the potential is still there for a try higher, possibly towards target X1 in the 15,800 area, a more recent topside target for the small diamond continuation pattern overhead. We still have the projected 50% Fibonacci line at 15,629. Now, so far today, a gapping lower open, down through the congestion from the recent diamond pattern between 15,200 and 15,290, but getting clogged up in the smaller congestion from recent days in the 15,155 area. The next real support in size is the rising short medium moving average, currently 14,981, partnered with the October 2020 today uptrend, currently at 14,902. These do not look threatened at the moment. US E-mini S&P futures. Perhaps a seminal day yesterday in what has seen a number of influential actions in recent times. It was a key reversal down yesterday, capped on top by the important 50% projected Fibonacci line at 41.83 and punching down through and closing below the important lower time, currently 41.52, of the influential, if broken, December 2020 to early February 2021 bullish Andrews pitchfork. Now, this pitchfork has indicated the bullish angle of attack since its inception in early February. The fall was halted by the Fibonacci congestion at 41.10 or 41.08. I've recently tried to address the really big issues that we've had over the past 2 weeks. I think it is worth reiterating them again. Okay, 2 weeks ago we had a big weekly key reversal up. Then last week we had an immediate countering weekly key reversal down, only halted in its fall by the rising short medium moving average currently at 40.81. Does this mean that the first bullish weekly key reversal is cancelled and superseded by the second larger bearish one? Well, the answer is yes and no. I'm sorry to sound obtuse, so I'll explain in more detail. On the surface, it does show a stronger bearish pattern has overcome a quite strong bullish pattern immediately. For those who like their answers simple, there you have it. However, the true answer is more complex. What it shows is the depth of indecision that this market has undergone since early April. And so I would say it is indecisive even now, purely because of its unusual nature. Personally, it would not surprise me to see some weekly bullish pattern this week to be a counter to the counter, though I have to admit such a key reversal down as we had yesterday is a seminal moment. This is one worth watching carefully, even more than before. So far today, a lower open and a fresh try lower down through the Fibonacci congestion and halting at the combination of the important 50% projected Fibonacci level at 40.82 and the rising short medium moving average currently 40.81. As I said, this one is worth watching carefully. French CAC 40 futures. A second bearish black crow yesterday, but also a new all-time high. This obtuse behaviour yesterday was not all. We also had a combined key reversal down and bearish engulfing pattern, closing once again below the lower times of the December 2020 to January 2021 bullish Andrews pitchfork currently at 63.98 and the new late January, late March bullish shift pitchfork currently at 64.07. The utility of these two bullish Andrews pitchfork is seemingly coming to an end. The market nevertheless was halted in its decline by the significant 50% projected Fibonacci level at 63.48, closing just over it. All this action is in the frame of last week's weekly key reversal up, for which yesterday's action is a further disappointing move. I'll just leave this with you as I've said for the last 8 weeks, and I quote again, all is moot until prices move out of those tines. Well, it looks like the moot is finally becoming the truth, unless things turn quickly. So far today, a gapping lower open that is still gapping as I speak, and adding further weight to the retiring of the two bullish pitchforks. The market has been held up by the important April high at 62.80 so far. The next significant support is the previous all-time high back in July 2007 at 61.69. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.